Welcome back to the Traders Network. I'm Michael Yorba, your host. Thanks for joining us. We're also streaming to you live on yorbamedia.com. All right, I've got Nick Santiago, president in the Money Stocks with me. Nick, welcome back to the show.
It's great to be back, Michael. Thank you for having me.
My pleasure. Okay, you got a couple of stocks that you were pointing out to us today. So let's see, KO is the first one?
Yeah, I wanted to take a look at CocaCola because one thing I noticed is that a lot of these stocks like Coca-Cola, Pepsi, Clorox, all these consumer type stocks are really taking a hit, getting a hit today. So these stocks are all declining, and basically it's on the back of higher bond yields. One thing I want to point out, though, if Coca-Cola gets down to around the $37.75, maybe even $38 level, that's a spot where traders can own this equity. So, don't discard them. There's still growth value there. There's still good upside. Just let them come in a little bit. You could watch this one right around the $37.75 to $38 level.
Okay, are you thinking that 2014 is going to be a better year for Coca-Cola?
I think it's going to be a tradable year for Coca-Cola.
Okay, so
but if you take a look at the stock, since October, where it was trading down around that $37 level, that's a good place where it was defended by the institutional money. And this time around $38 is probably where they'll come in and defend it this time.
Okay, all right. PEP.
Yeah, it's pretty much the same kind of story. This is PepsiCo, so we're looking at something similar. And again, if this gets down to around $77, that's where I think traders can be all over this equity. It's had really a terrific move this year, but when interest rates go up, these don't become as attractive. But around 77, that's where you're going to find good value in this equity, and you can trade it to the upside.
Okay, all right. A CLX.
Yeah, this is just sticking with the same theme, and this is Clorox. Again, it's had a great move in 2013, but we'll watch this one if it gets back down to around $88. I think 88 to 87, that's where traders can own this equity. Don't touch it beforehand because there's probably more downside in the near term.
Okay, all right. And CVX.
Yeah, this is Chevron Corp, and I wanted to bring this one up today because Exxon is having a big day. Exxon's up $1.34. Chevron is negative. But a spot where traders can get involved with Chevron would be around the 115.50 level. So keep that on your radar. You still got a fair amount of downside here, but right around 115.50, get into Chevron. That'll give you the bounce that we're looking for.
Okay. All right. This is nice. There's no hedging. It's just straight up. This is where I love that. But people love a straight answer to a straightforward question, and you do that here. I appreciate it.
That's what we try to do.
All right. Now, J.P. Morgan.
Okay, when you're looking at J.P. Morgan, now this stock is having a decent day today. It's up about 36 cents in a down market, so we want to respect it. But J.P. Morgan, in my opinion, still has more downside to go. But a level where it looks very, very attractive is going to be right around 53.50. So keep that on the radar. JPM gets down to 53.50. That's a very, very attractive level. Now, over the next couple of weeks, this stock could be pretty choppy. You do have some Fed announcements. The stock's always in the news with a lawsuit. They're settling. They're paying out billions of dollars in lawsuits. But the stock remains strong, and we have to respect what we're seeing on the charts. So around 53.50 is where I see a lot of institutional support still for this equity.
Okay, all right. Now that's a pretty decent size looking drop here from 56.43 to 53.50. Are you thinking? Well, give me your thoughts on after it hits 53.50. I know you said you wanted to pick it up there, but is that like a long term hold for this? Is that a position building
for
place?
Me, a long term hold is 3 weeks.
Okay.
So to be honest, nothing's really that long term for me. If I was to look at this equity for a long-term hold, it would probably be much lower, around $49 or even $49.50. And I think that's where traders could get involved in stock for maybe 3 to 6 months. But the 53 level, I think that's going to just be a level we could probably trade up into sometime in January, and that would be about the extent of it.
Okay. All right. Got that. All right. Well, talk to me about the trading room today. You had gap trades or anything of that nature?
No, we had a dynamite trading room. We hit Tesla for $3.50, SanDisk for 50 cents, Anadarko Petroleum for $1. We're going to try to close out a Facebook trade that we're in. We got in Facebook last week at $45.15, and we're going to sell out of it soon. Today it's trading at $51.93. We also had a Trillia trade, TRLA, which was a blockbuster today. We bought that at the dead lows, and we exited that one, half of that one already for a scalp, and we're going to hold the other second half for a swing trade. So it's been just a very exciting day in the trading room, and the one thing I think traders need to realize is every day there's excitement. Sometimes the markets could be slow, but you get days like today, and it's just a blockbuster day in the trading room.
All right. Let's go back to the S&P, or the Dow, or we could talk about the Russell or any of the other markets that you're trading, because there's a lot of people wondering what's going to happen next with those indexes.
Well, I'm wondering too.
Okay.
I believe right now the markets are shuffling a little bit, right? You got a little bit of money coming out, but and everybody's a little bit on edge about the Fed announcement. I'm really not so much. I've been a buyer of a lot of stocks, and over the last few weeks on your program, I've been really telling traders, listen, buy these pullbacks. We're going to get some nice pullbacks, and they're buyable. And that's what I've been doing. That's what I'm going to probably continue to do until the end of the year. I'm not so much trading the major indexes at the moment, but more so watching the individual names. And I'll tell you why. What's been happening really, especially in 2013, is we're getting what we call industry group rotation. So at certain times when stocks become too extended, money's coming out of that industry group and going right into another industry group. And that's why the major indexes have been able to stay up at these highs, even though we've had so many declines in the market. So I think we're just going to continue to follow that strategy and that theme and let the market make money for us.
Okay. All right. Interest rates. There's a lot of worry about that. You're just mentioning, the Fed announcements are coming up. Are you thinking that we're going to see any movement at all in the longer term end of the yield curve versus the shorter term? Because the short term, they're probably going to keep them low, right?
Right. I don't think this meeting they're going to do anything, to be honest. Okay. This is Bernanke's last meeting. I'm looking at the way this market is behaved. You have Bernanke and Yellen, they're both the two of the most dovish people in the Federal Reserve. I just have a hard time seeing them do anything. And if they do something, it's going to be rather small. The market might even interpret it as somewhat bullish because of this current pullback that we've had over the last few days. So I really just don't expect much. If yields do move up, they're not going any higher than 3.04% on the 10-year Treasury note. So that would be the extent of it either way. Okay.
Have you been got any thoughts on either the currencies or the copper market? Because you traded that pretty darn well.
Yeah, well, right now, looking at the U.S. dollar index, you got a pretty strong move today. And the dollar could be poised for a move back up to 81.50. As you know on your program, Michael, I said 81.50 for the U.S. dollar index would probably mark the top, and it just got maybe a couple of ticks higher than that back in early November before falling. And I said, we get down to around 79.75 to 79.50. That's probably going to mark the low. And I think we're just going to be in that range right now with the dollar. I don't think it's going to go much higher or much lower from where we are now. As far as the copper market is concerned, copper has been, ultimately pretty strong the last few days. Now I think we're getting to a level where we probably need to pull back, but it could have a little bit more upside, maybe to around, 340, 345, but that would be the extent of it.
Okay. All right. Now we got a $30 move in gold today. What do you think there?
Yeah, well, I know a lot of gold sentiment is at an all-time. I've never seen people become this bearish on gold, so I am not one of them. I'm looking at a few different things on my charts, which are telling me that gold is now starting to get close to the accumulation phase. I do think it needs to go a little bit lower first, but I don't think it's going to go significantly lower. I do think we're going to probably test those June lows, maybe even break them, but watch for the reversal back up. That could be significant.
Got it. All right, we're out of time, but before we go, please, contact info so our people can get into your room with you.
Yeah, come on over to InTheMoneyStocks.com. Michael, we offer a 7-day free trial to our intraday trading room where you can see everything that we're doing. You could also ask us questions throughout the entire trading day, or you could join our research center. We hold 2 live broadcasts each and every week for members. We call that the No Hype Live. And traders can come in there and ask us any questions. In fact, I'm hosting a No Hype Live broadcast tonight at 5:15 p.m.
Okay, and InTheMoneyStocks.com is where they go to register for that?
That's correct.
All right, Nick, thanks so much. We'll see you next week.
Thank you, Michael. Have a great day.
You too. All right, everybody. Nick Santiago, President, CEO, In the Money Stocks. Definitely get in that room tonight with him. You're going to, I mean, you've seen the results this guy's been producing for us for over 2 years. All right, coming up next,